Hey traders, Jason here from Lever Brothers. So in this video, I want to just walk through what I see going on beneath the surface. Okay, on the surface, market's doing fine. Okay, S&P new high today, NASDAQ new high today, mega caps doing well. But I'm starting to see some stocks start to act as if the market isn't as healthy as we're led to believe. Okay, so if all you do is like log in once a day, at the end of the day, you see like, hey, S&P's up this new high, you think everything's fine. You think I could buy a basket of stocks, a rising tide will raise all ships, everything will be fine. But there's actually some weakness beneath the surface, which tells us, one, the market's getting a little thinner. There's a smaller number of stocks doing well while there's a lot of stocks being left behind. Two, you can't just buy any old stock and assume that it's going to be pulled up by the overall market, because this has become more of a stock picking market. You can't just buy a basket of stocks and hold on and hope it does well. All right, let me show you what I see out there. Okay, so AMD doing incredibly well. This is one of our trades at Lever Brothers. It has been trading above its 21-day moving average here for, as you can see, a couple months, and gap there, a bigger gap there, and it seems to be running away. So it doesn't need to rest, yeah, but this has been a fantastic trade for us. And it's partially responsible for the NASDAQ and the S&P being at a new high. Google, not at its high from over here, but it's a sloppy mover, but the fact that it's been trending up and continues to trend up overall is a contributing factor to the market's new highs. Meta, done really well, moved off the double bottom over there in April, consolidate here, consolidate and break out there, consolidate, as you can see, and break out there. This is an all-time high, definitely a contributor to the market being at an all-time high. Nvidia just keeps going and going and going. I mean, this is like one of the largest companies on the planet, and it went from 90 to 180 in a couple of months. I mean, you see that from small caps. Small caps will double in a couple months. The biggest, one of the biggest companies on the planet shouldn't double, but yet that's what it's done. So definitely Nvidia is a contributing factor to the market being at a new high. Oracle has done incredibly well. It too has more than doubled. Palantir has done incredibly well for a long time. It's a sloppy mover. There are definitely some, stiff move down, stiff move down, stiff move down here and here. Even this one's a little bit, but the stock has a tendency to right itself and continue on. So this is why the market's at a new high. Microsoft, you don't see this very often, just steady, 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 and then gap up, 5-6% today. This is why the market is at a new high. And then Amazon. Let me see here. Yeah, Amazon. Like Google, it's not back at its high from back in January, February, but because it's been doing this for several months, it has contributed to the market being at a new high. This is another one of our trades at Lever Brothers. Okay, so this is on the surface. These are all mega caps, huge stocks, near $1 trillion stocks or nearly $1 trillion stocks, and they're all steadily trending up. Most of them are either at new highs or very close to new highs. This is why the S&P and the NASDAQ are at all-time highs. But when you look beneath the surface, here's AAOI. This is a trade of ours at Lever Brothers. You can see it broke out. You can see lots of volume down here. It ran up. Our target was $30. It hit that. But then it got really loose, and then it gave a big chunk of it back. Okay, so in a strong market, you see stocks would like tighten up here. Whoops. They would tighten up here on less volume, and they would respect moving averages. But in this case, it dropped enough that the 21 is actually rolled over and is now trending down. Okay, so it seems like a character shift. Instead of moving up, consolidating quietly, and then moving up again, this moved up. Volatility expanded or stayed high, and then it just pulled back more than it should have. Archer came out of a mini base here, ran from 12 to 13, or from 11 up to 13.5, and they gave it all back. Okay, so again, if in good conditions, this would tighten up, volatility would contract, you get a high and tight pattern, and then it would move again. In this case, it just gave everything back. Black Sky came out of a base here, great trade for us, came out of that base, flagged over here, broke out again. Then they did a secondary offering, and you can see down it went. Now, in a really good market, they would do a secondary. The stock would gap down. It would find its footings, and then it would actually move up and fill the gap, and it would be business as usual because Wall Street would view the secondary as something good. They're going to use the money to, expand the business and such. But in this case, it just gave everything back, and it's still falling. BBAI, another one of our trades at Levitt Brothers, came out of a pattern here, paused here, did extremely well, moved up to our target. But instead of quieting down, volatility contracting, this is very loose. Okay, this is how tops form. This is not how consolidations form. Canadian Solar comes out of a base here. You can see runs up, goes to our target, and like the last one, this is kind of loose. Okay, it's kind of loose, and it comes all the way back down to the breakout area. If the stock is strong, it tightens up. We do get volume falling off here, but these candles are kind of big. Okay, in a healthy market, you have stocks move up, they consolidate, volume drops like it did, but volatility also drops, and you definitely don't get a move all the way back down to the breakout area. Okay, so I'm seeing this more and more. So while the mega caps move up and just keep moving up and up and up, I see stocks like this that give us great trades. We have a lot of quick 10, 20, sometimes 30% moves in a couple of weeks, but then gains are being given back. To me, that's a little bit of a warning. Okay, Coreweave, lots of people following this stock. Rounded bottom here, runs up, consolidation here, breaks out, doesn't get any follow through, volatility stays kind of high, and it just keeps going down and down and down and down and down. In a strong market, it's going to find support at like the 21 here and bounce. Instead, it just went right through. 21 is now slanting down. That's not what typically happens when the market is really healthy. Datadog, another one of our trades, consolidation pattern here, broke out, consolidation pattern here, slid up here. Our target was actually 135, so I'm guessing this gap was earnings. But as you can see, again, kind of loose here. Okay, instead of tightening up, quietly fading back to a key moving average, moving sideways like this to allow a moving average to come up and meet it. Instead it's gotten pretty loose, like bigger swings up and down. That's how tops form. It's not how consolidations form. Galaxy Digital, another one, a lot of people watching. You got this kind of double rounded bottom here, runs up huge. Everything's great here except two things. Number one, you got a move from 33 to 26, which if you're trading, you just can't hold through that. I realize it's bouncing right now, but like you can't let a stock go that much against you. And then the size of these candles are huge. Okay, that's not how consolidations form. Consolidations don't form on high volume with big candles. They're quieter. Okay, they're quieter. Volatility contracts. Okay, people lose interest a little bit. There's not a lot of selling or buying pressure. It just quiets down. They don't get like really big like that. GSAT, another one of our trades at Levitt Brothers, came out of a base, consolidate here, runs up. Our target was 28. Everything great, except it pulls all the way back to the last breakout area. Okay, notice how on the way up here it moved, it moved up, consolidated quietly, moved up, consolidated quietly, moved up. But then this is a bigger move and a more volatile move than we had previously gotten. So that's a warning. And finally, REDCAT, another one of our trades. Gap up here, put it on our trading list, broke out here at 9.5, ran up huge. I think our target was 13, so we just missed it. In a good market, this would quiet down here, rest, consolidate, and then try to break out again, but it just gave everything back. Okay. So what I'm seeing money is flowing into safety. Money is flowing into the mega cap tech stocks like Microsoft and Oracle and Meta. And it's the smaller growth names that we've been playing, they're still tradable, but a lot of them are going 20%, 30% in 2 weeks, but then they give everything back. Okay, so it's like you can no longer just like buy a whole bunch of stocks and figure, hey, the market's at new highs, everything's great, I'm going to keep going. the market will like save me or backstop any losses. It's not the case. There's a lot of stocks that are giving everything back and suffering big losses. So it's become more of a stock picker's market. You got to be more careful. You got to be more diligent managing positions. If you happen to be in the mega caps, you think this is awesome. If you've been more active in the smaller cap tech names that have, that are much more volatile, then you're kind of wondering why or how the market's at a new high, because what you're looking at, like your screen, doesn't look as bullish as what the index would suggest. So it's a stock picker's market. You got to be a little bit careful out there despite what the indexes are going to tell us. All right, we'll see you next time.